Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig.
All right, back on Personal Pension Radio. So excited to be here. Personal Pension Radio has been a passion project of mine now for, 195 episodes. Thank you so much. Everybody listening, everybody who's shared it, everybody who's given me feedback. So truly appreciate the support. I really do. You heard it. I am the income engineer broadcasting from the Personal Pension Radio Workshop in my backyard. That's right. If you haven't listened to the show before, I am a woodworker. I have a hobby as a woodworker. I love to tinker. I love to build stuff. I'm remodeling my own kitchen, building my own cabinets, doing all that kind of woodworking and fun stuff. And I have a full-blown workshop in the backyard, and that's where I do the podcast from. So the Personal Pension Radio Workshop, very glamorous here in Southern California. My mission is really all about that retirement dream that Wall Street promised. Maximum retirement income does not come from a product. It doesn't come from investments or real estate or life insurance or annuities. It's a combination of all those things being organized and engineered together properly. And a big question that I get asked all the time is areas that I can help. Because I am, to quote a little, "Oh brother, where art thou?" Because I am a bona fide, certified financial planning professional, I can help in a variety of different areas of legitimate financial planning. In the areas of IRA, Roth IRA, 401ks, rollovers, investment account review, life insurance, both term life insurance and permanent or cash value, disability insurance, insure that paycheck, as well as long-term care planning. Those are all areas that with my years and years of experience, I can help with because I am, as I said, a bona fide certified financial planning professional. Now, with that said, full disclosure, I am not an attorney. I am not a certified public accountant. As a certified financial planner professional, that still doesn't mean you should act on things that you hear on my show as if you are hearing personal advice for you. The best way for anyone to proceed with big financial or legal or tax advice is to meet with a qualified planner in person. And myself as a certified financial planner, I'm really that quarterback to help organize the entire team necessary to make sure that it all works out right, that it's all balanced properly. So now, I want to jump right in this week. I get a lot of questions about, I wonder what Kraig's deal of the week is going to be this week. This week, I didn't actually come up with a deal of the week. Contrary to somebody's opinion, my wife, I don't just simply spend money just for the heck of it so that I could find a deal of the week this week. I just don't. So I actually have been busy with my auto club, my Porsche Club Autocross. We had this big fun event that I got pegged to lead up the charge to do this autocross event where you get in your car, whether it's a Porsche or a Miata, and you race around the giant parking lot to see who can race around the course the fastest. And that event took up a lot of my time, so I wasn't really out doing anything specific or spending any money. Nothing of any worth speaking of. I'll definitely have a deal of the week coming up in the future. But what I want to do is I want to jump into segment one, which has always been, and I think will continue to be, watch your step. And just as a reminder, what I mean by that is I grew up in Maine. I grew up in the country. I worked on farms. I worked, in the woods. I went hunting and fishing and, very rural country setting. And depending on where you were, it was always important to watch your step because you never knew if you were going to step in a pile of something that was going to make your foot smell real bad, if you know what I mean. So just watch your step. There's so much information out there in the world today. And the one that I really want to focus on just bugs the heck out of me. Absolutely bugged the heck out of me. I didn't say this to the individual that I was talking to, but But back east in Maine, there's a certain cabin on a certain lake in Maine that I fantasize about. I literally dream of spending time there. I love, love, love this place. I spent summers there as a kid. I've gone back now a number of times as an adult. And I just love this little road, this little street in Maine on a lake that it feels almost private. And this one house was for sale a long time ago, right around the time of the Great Recession. And it just, man, did I want to buy it. Oh, always I complain or think, oh, I should have bought it, shoulda, coulda, woulda. And whenever I stop and really back the truck up and take my ADHD and calm myself down a bit, I always realize and remember it just wasn't a good idea then. It isn't a good idea today. The lady who bought the house that I love so much, and I have rented it twice and enjoyed being there for a week or two now and then, she's actually selling that property. She called me. She was such a sweetheart to call me and say, I know how much you love my place. I wanted you to be the first to know that I'm going to sell it. She wanted to give me first right of refusal to maybe make an offer to buy it. And I told her, no, I'm not going to be thinking about doing that. And I really appreciated her calling me first. I asked her, though, who did you choose as your realtor, your real estate professional? I said, did you choose Kelly? You know, Kelly, the one who sells everybody's house there in that small town? Oh, no, she says. And this is the part that got me. I'll try and keep a level head. She says, oh, no, I went on Dave Ramsey's website and I found one of his endorsed local providers, his ELP. What? Unbelievable. Blew me away. So just for the record, Kelly, the lady that I'm referencing, and I'll say it, Kelly Webb, she's actually the most experienced realtor, real estate professional in that small community that you could ever ask for. She knows everybody. She has all the connections. She actually operates 2 businesses right in the same vicinity of the cabin that she's selling. She's like the perfect realtor for selling this property. She knows the market. She knows that community. But where did this lady go? She went to Dave Ramsey's website and found a realtor that pays Dave Ramsey money so that Dave Ramsey will fake endorse him. That's what he's doing. An endorsed local provider is nothing more than someone who pays Dave Ramsey money so that Dave Ramsey will fake endorse them. It is an absolute just mind-boggler to me that anyone would choose a professional from such a service. That just blows me away. Absolutely blows me away. So watch your step, folks. I mean, the idea that someone is an endorsed local provider, come on. They pay money to be on that list, right? Now, I will never be a Dave Ramsey endorsed local provider simply because I speak out against his preaching, which I believe to be wrong much of the time, and you'll hear about that a little bit later. Now, before I forget, under the Watch Your Step segment, I do this now and then. I want to remind you to freeze your credit. Identity theft is rampant. Absolutely rampant. Whenever you ask somebody, is my data safe at the bank, at the grocery store, at Saks Fifth Avenue? No, it is not. Your data has already been lost into the wind, into the cyber wind around the world. Your data is probably already out there in the wind. They just haven't gotten around to stealing your identity yet. One of the strongest ways that you can, and least expensive ways for you to protect your identity, is freeze your credit. And if you send me an email to Kraig at kraigstrom.com, that's Kraig at Kraigstrom, KraigStrom.com, and just subject line freeze, I'll send you back the link to freeze your credit. My wife has got her credit frozen. I've got mine frozen. My daughter's got hers frozen. What this means is that no one can use your Social Security number to apply for a job, to get a job at a chicken farm in Tennessee. They can't open a grocery store card. They can't buy a car. Nobody can run your credit because it's frozen. Now, I'm looking at updating my mortgage on my house, so I will go in and I will thaw my credit for 24 hours when the bank needs to run my credit. If they need to run the credit at all 3 credit bureaus, I can thaw my credit for free. If they need to run my credit for one company, I'll just thaw one company. TransUnion, Equifax, Experian. Super easy, not hard to do. Unless you're like me and you forget which email address you use to freeze your credit. Yeah, my wife's covering for me on that one. She's got that covered. Thank you, my wife, for covering me all the time. All right, segment 2. This is a segment that I will use for listener questions, client questions, and today also a rant or two from Kraig. Now, last time I had mentioned my Apple Watch and my Vitality Program update that I'm a big fan of life insurance for protection purposes first. So if you're got family, kids, you got a job and both of you are working, you got to make sure you've got good term life insurance, right? So I actually updated my life insurance recently through the John Hancock Vitality Program. And by the way, that is something that you ultimately get through a financial advisor. And I would love to be that person. So if you want information about how I basically got a brand new Apple Watch 4, for now, my price is actually only $12.50 a month. And I'm only a short distance away from my Apple Watch being free because the Vitality Program tracks your health statistics. It syncs with the watch, so it tracks, all the things about you. It tracks your activity, so that the more active you are, the healthier you are, the lower the price for the watch, the lower the price for your insurance. I love technology, but I would still never buy an Apple Watch unless I had a chance to get it for free or nearly free, right? So if you're interested in updating your life insurance and getting a really cool Apple Watch 4 with EKG monitor and all these bells and whistles in there, included in your life insurance package, send me an email, Kraig@kraigstrom.com, Kraig@kraigstrom.com, Apple Watch in the subject line, Apple Watch. And I'll know that's what you want. You want to get in there, get your life insurance updated, and get yourself an Apple Watch. And last time I also talked about a couple that was introduced by their CPA, doing some income planning. Really think you should check that out because income is not always about how much you have to invest. It's also about how you structure your income planning, right? Now, this episode, I have another opportunity to be introduced to someone through one of my clients, right? So this great couple was introduced by one of my clients, and they needed help with their estate planning. That's their living trust, their wills, their powers of attorney, and all that. And I am, in addition to being a certified financial planning professional, I'm also a paralegal at an awesome law firm, right? So these folks came in to visit with me or contacted me specifically because they need to get their estate plan done. Now, the missus, called me and we got the ball rolling and it was like, yeah, let's do this. Let's get going. This is going to be great. And I said, I'll send you the estate plan questionnaire. Then we'll get you scheduled where myself and the attorney will do all that. We'll get going. Now, that was 3 weeks ago. And she and her husband keep dragging out the process of completing their estate plan despite things like this. Here's the thing. She called literally yesterday to start another round of just quick questions. Quick questions, Kraig. All right, fine. I'll do my best. I'll keep answering the quick questions. But prior to asking me her quick questions about the estate plan that she really wants to get started, but she hasn't started because she keeps asking questions and Google searching things, She tells me the story of her neighbor who had a stroke in her swimming pool, nearly drowned, is now in the hospital unconscious, and her neighbor's family cannot find any of her legal paperwork. Apparently, she had no will, no trust, no powers of attorney, nothing. Right? And she and her husband, this new prospective client who's telling me the story, oh, we've been so busy and concerned. We've been at the hospital with our friend and the family and such. So she tells me this story, right? And I couldn't help it. I'm done. I said, excuse me, maybe you should look at your neighbor's situation and realize, wake up and realize that you and your husband need to get your estate plan done and stop tweaking and asking questions. You can do the tweaking and asking the questions later. Get it done. Oh my gosh. Unbelievable. So please, if I can encourage you to do anything, folks, if you have started down the path of getting your estate plan done or getting your life insurance done or getting your retirement planning done, or you haven't, get started. There is a great riddle. The riddle is 4 frogs on a log. 4 frogs on a log. 3 of them decide to jump. How many frogs are left? 4 frogs on a log, 3 of them decide to jump. There are still 4 frogs on the log. They didn't jump. They decided to jump. They didn't jump. Get off the dang log, folks. This stuff's important. I'm here to help. If you want to get your living trust, your estate plan done, if you want to get that kind of stuff done, send me an email, Kraig@kraigstrom.com, Living Trust. We'll get a consultation going straight away. The consultation is free. You get the information. Get off that log, okay? Now, a listener question came in. Good question here. I really appreciate it when questions come in. You can always send those in, Kraig@kraigstrom.com. And the listener says, Kraig, I listened to the episode where you talked about doomsday prognosticators. I like that big word, doomsday prognosticators, who say the dollar will go to zero. Now, that's a few episodes back where I basically give my opinion that it's not likely, right? I agree, and then this person, the listener, says, I agree with you that this is highly unlikely. Do you think that we are at risk of some economic calamity? So that's the question. They say they agree with me, but then they finish with this question. Do you think that we are at risk of some economic calamity? Great question. My first answer is maybe, could be, possibly, most likely, but I don't know. That's the truth of the matter. Anybody that claims to know doesn't know what they're talking about. Because the world and the information that's out there in the economic world, the financial world, it's just too big. There's no way to know. I mean, there's no way to truly know what's ultimately going to trigger it. Maybe a group of people will know somewhere, but you'll never know, right? My thing is, the calamity that I'm concerned about, the one that kind of keeps just nibbling at me all the time, that I keep bugging me, is the consumer debt crisis in the world in general, but in the United States, of course, because we are the single largest economy on the planet, our consumer debt crisis in the U.S. is just unbelievable. It's on an order of magnitude that it's hard to grasp. And let me give you, I'm going to use a few examples here so you get an idea of what I'm talking about, okay? Because people think, oh, we went through the Great Recession, so things must have changed, right? You know, the banking laws changed, the investment laws changed. That can't happen again, right? Wrong. Absolutely wrong. Who controls the world? Banks and Wall Street, right? Banks and Wall Street, banks and Wall Street, and of course, the U.S. Treasury, right? The government prints money like a drunken sailor, my mom would say, right? So let's talk about this, because everybody thinks, oh, everything's is fine, right? Let's talk about John Deere. John Deere, you know, that good old American tractor manufacturer, John Deere. John Deere, like most major companies, automotive companies, big commercial equipment companies, they also offer financing. They will sell you a tractor on payments. So you can buy a $25,000, $30,000 tractor, a $400,000 tractor, and John Deere Company Financial will finance it for you, right? Okay. So back in July of 2008, we're talking Great Recession, explosion, Mount Vesuvius of Great Recession happening, right? John Deere had accounts receivable of just about $4 billion. That means that companies owed John Deere $4 billion on loans for equipment that was financed. So this is new equipment that was sold and basically sold on payments. Okay? Now that was July 2008. The world is falling apart, right? We know what's happening in July and through the end of the year in 2008. The financial world is just blowing up. Okay? What happened to the accounts receivable balance for John Deere from 2008 July to October 2008? Just a few months. The accounts receivable balance jumped up to $20 billion. It went from $4 billion to $20 billion in just a few months. What was the government doing around that time to try and prop up the economy? Basically giving money away for free, lending money out for free so people could buy stuff, right? Finance things cheap. What was John Deere doing? They were financing the holy heck out of equipment. They were selling it cheap, dirt cheap, right? But now they went from $4 billion in loans outstanding on the books in just a matter of a few months to $20 billion. Today, right now, the last line that I checked when I looked at the balance sheet for John Deere, they have outstanding loans on equipment of $35 billion. $4 billion in 2008. 11 years later, they're sitting on a $35.2 billion account receivable. What happens if we have just a little blip in the recessionary kind of cycle of life and that little, Hoboken farmer that's out there trying to grow organic grapes or something, he or she can't afford to make their payments all of a sudden because their accounts got canceled because we're in a bit of a recession. Well, they can't pay for their tractor anymore. The only way they could afford their $30,000 tractor is on payments, right? So John Deere has a massive accounts receivable budget out there that just makes me nervous. I'm not saying I know when or where anything bad's going to happen. I'm just saying, wow, that's a gigantic amount. Well, what about General Motors? You know, General Motors, the company that should have been allowed to go bankrupt. They should have been allowed to go bankrupt. If they couldn't survive through the Great Recession, they should have gone the way of the dinosaur, which is what they were. That's my opinion. Sorry. The government steps in and basically bails them out, buys General Motors. Let's take a look at this. Back in 2009, December 2009, General Motors had accounts receivable of $7.5 billion. Accounts receivable, $7.5 billion. Today, $39 billion. $7.5 billion. Now today, accounts receivable, $39 billion. That's insanity. Absolutely insane. And you know that all the people who borrowed that money, they're all completely good for it, even if we have a recession, right? Wrong. Of course not. Right? That's the scary part. So this is a great question. Thank you so much. I personally think that the big concern should be what happens to that consumer debt bubble. We have a serious consumer debt problem totaling around $4 trillion. $4 $4 trillion in the U.S. And then you add to that, student loan debt is $1.5 trillion. And what's the difference between student loan debt and consumer debt? Consumer debt, you can file bankruptcy. Student loan debt, it is against the law. You cannot file bankruptcy on student loan debt. Of course, who's the lender? That's the government. Of course, the government makes the rules. You're not allowed to file bankruptcy on student loan debt. Consumer debt, though, $4 trillion. So between those two, $5.5 trillion in debt. It may not be mortgage debt that bites us in the butt during the next recession. Consumer debt is huge. When everybody starts defaulting on their John Deere tractors and their General Motors car loans, then, right, that's when I can swoop in and get a great deal on a tractor. That's my joke. I probably still won't do it, but when everybody starts getting foreclosed on, or the John Deere tractors are going to the auction because they're in collections and default, that's when people like me, who are always looking for a good deal, can find a great deal on a John Deere tractor. Be ready for the opportunities, folks, like great deals on tractors. Now, I thought I was done today for today's episode. I thought I was going to do a short one and just give you my take on that listener question. Love it. Appreciate it. But I went to drop off my tires at the tire shop. I need to put new tires on my car. I have a car dealership license, which affords me the opportunity to buy tires directly from the warehouse that tire shops buy their tires, so I save a lot of money on tires. I guess that's my deal of the week. I basically got 4 tires for the price of 3 at a tire shop today, right? So I went to drop off my tires, and on the way back, I couldn't help it. I'm listening to the radio, and sure enough, Dave Ramsey's show is on the one radio station that comes in okay near my house. And this guy is calling in and talking to Chris Hogan. Chris Hogan is filling in for Dave Ramsey on this particular episode today. Now, this guy's calling in. His name is Ed. He is 68 years old. And I caught it right at the end of the conversation where Ed, right, is asking an extremely important question. He's asking Chris Hogan, what do I do to protect my wife if I die after my term insurance expires? He says she will lose 60% of her income. 60% of her income. 68 years old. And what do I do if I die after my term insurance expires? My wife will be in trouble, basically, right? Now, Chris Hogan. Who the heck is Chris Hogan? All right, Chris Hogan is one of the Ramsey personalities. I was curious. I could not remember his background, so I looked it up. Chris Hogan is now a financial guru under the Dave Ramsey umbrella. Here's what it lists as his experience for being a financial guru. He has a career in banking and mortgages. What? That's his background? He's not a certified financial planner professional? Right? What? He's not? Oh my gosh. I'm like, okay, wait a minute. What's his background? Right? So here's his answer to the question. 68 years old, what do I do to protect my wife if I die after my term insurance expires in 8 years? Chris Hogan's answer, filling in for Mr. DR, see if you can extend your insurance out another 10 years. Find out what that would cost. We're just getting numbers here, he says. What are you talking about? Oh my gosh. FYI, at 68 years old, okay, term insurance running out in 8 years, that's unheard of. That's already very expensive term insurance. But let me tell you what happens with term insurance at, let's say, 70 some odd years old, 76. even if you could get it, the insurance company is going to rob and pillage you for premiums because term insurance has never been priced for people who are 80 years old. It is not that way. They price term insurance cheap to expire before you're 75, usually, before you're 65, because 99% of the time, nobody ever dies and cashes in. So term insurance, this idea that you could extend your insurance, let me tell you how that works. At the end of the term premium guarantee period, you always have the option to extend. They just send you a new premium. Your premium, let's say, is $1,500 per year. You locked it in for 20 years because you followed Dave Ramsey's advice, and he said, you should only ever get term insurance, and you'll be rich enough that you'll never need insurance when you're old, right? So 20 years later, that $1,500 annual premium term is over. On the 21st year, you get your new premium if you want to keep the policy. And your new premium went from $1,500 a year to $16,000 a year. $1,500 to $16,000. By the way, I don't know what the number is, but whenever I've seen it, it's a massive jump. It's massive because the insurance company priced the term insurance cheap because they're thinking you're going to be gone in 21 years. And they want to make sure that you're gone in 21 years. So the premium will reflect a number that will generally get rid of you. They don't want you anymore. Okay? And Chris Hogan is like, oh, just see if you can extend your insurance for 10 more years. Of course you can. It's just going to cost a couple $100,000 to do it, right? And then he says this, you also need to consider how you are investing your $80,000 per year with no mortgage. Great. You've got no mortgage on the house. How are you investing that $80,000 a year in income? Because you must be able to save money because you don't have a mortgage, right? So Chris Hogan, hello, Chris. Do you think maybe people who are 68 years old going into 70, 75 might have increased healthcare costs, medication costs, any number of things can come up, right? But the answer is you should think about investing. Well, listen, here's what he really did, is he wrapped up that call as quick as he could because I swear at that moment, I'm yelling in my head, permanent life insurance. This is the reason people should have permanent life insurance. That's exactly the case. You need a life insurance policy that doesn't expire before you do. That's permanent life insurance, cash value life insurance. There's different ways to put those together. And reverse mortgage. Chris Hogan didn't even mention reverse mortgage. This guy's got a paid off house. One of the biggest financial security items that this man could rest easier knowing that he has something in place is a reverse mortgage. But you know what Chris Hogan did? He got off the phone. Guess what? He's a financial entertainer. He is not a certified financial planner. He is not an investment advisor representative. He is not working for a registered investment advisory firm. He is a Dave Ramsey devotee making huge money by spreading Dave Ramsey's message. That's who he is. That is not the kind of person you should be taking financial advice from. Oh my gosh. I just wish this guy said, hey, Chris, I've got this permanent cash value life insurance. I don't see how I could have done anything better to protect my wife, right? I'll tell you what would have happened. They would have never taken that guy's call. They probably would have dumped his call because the answer would have been, yeah, you're right. It probably was a good idea that you got some locked in premium on some permanent cash value life insurance, right? What was I thinking? Of course, this guy was not going to say something that could bite the hand that feeds him, right? This guy is a devotee under the Ramsey umbrella, and Dave Ramsey says cash value life insurance is dumb all the time, no matter what. Doesn't matter if banks and billionaires and millionaires and corporate America uses it for hundreds of years. Cash value life insurance is just dumb. So Chris Hogan, I almost thought he was going to say it. I almost thought he was going to do the right thing. but you know he can't. And I do respect, I guess I understand why he can't, because his meal ticket is the Dave Ramsey empire. And you can't go against the meal ticket, I suppose. It's unfortunate. Now, on that note, remember my New Year's resolutions. I want to help you get your living trust and your estate plan in place. If you haven't had it reviewed in a long time, let's do that together. If you don't have one, let me help you with a complimentary assessment. Let me walk you through that process. If you haven't updated your life insurance, if you're wondering right now, man, or, wow, I wonder how my spouse will be if I die. Is my life insurance right? Do I have the right kind of term insurance or the right kind of cash value insurance? I want to help you. Let's schedule a complimentary review. You can email me, Kraig, with a K, at kraigstrom.com. That's going to do it today. Remember, don't be one of those frogs that decided to jump and never got off the log. I want to help. Even if it's not me, though. Get with a good financial planner in your area, or let's meet virtually. I work with clients all over the country, and I love it. I absolutely love to help. Thanks again for listening. I'll talk to you again soon.
Thank you for listening to the Personal Pension Radio podcast. We took notes for you, so if you missed any part of the show, you can find a full transcript of each episode at personalpensionradio.com. Be sure to download your free retirement income crisis report at personalpensionradio.com. While you're at it, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening. Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.